Yo, what's going on, guys? Bexio back, and today we got a brand new video. This time talking about the stock market and in particular Disney stock, because I think Disney is one of those stocks that is severely undervalued right now. And I think that because there's a lot of people who are banking or evaluating Disney off of the parks and all of that, how Disney used to be evaluated, because that's what Disney was, their movies and their parks. But now they've integrated a streaming service, and Disney Plus has been absolutely killing it. It is ridiculous what they've been doing. But we can look quickly at the earnings report right here. Just a simple overview on Robinhood, but just to get, they had an estimate earnings of 56 cents per share and blew that out of the water with 80 cents per share. And then got a lot of people getting hyped up about their earnings, and then because they're in a point where the parks aren't full capacity. Some parks are open, other parks aren't. Their park money isn't really there. So right now I think Disney Plus is holding them up and making sure that they're not like being sunk by these earnings and stuff. But I don't think investors or people are taking into account that what Disney Plus can really be. And we can see right here, this is their earnings stuff. They beat expectations across the board with parks returning to profit. So US parks, their global parks are things that are maybe not really operating as good as they could be. But you can see just in their subscriber count for Disney is 116 million subscribers. And that is insanely good for Disney Plus. Has only been around for what, like a year, maybe year and a half. Compare that to like Netflix stuff here. You can see Netflix is at 209 million subscribers. So that 116 to 209, Netflix obviously been around a lot longer than Disney Plus. So Disney Plus seeing this growth is a great sign, and I don't think people are taking into account what Disney Plus can do for Disney. I mean, just comparing Disney stock to Netflix stock, like we can see Disney has been kind of trading in this sideways pattern-ish for a while now, around this $178 mark. It's been getting well above it at 203 before it fell back down below it and then hovered around it, and then this recent one it got above it pretty good as well, almost 190, 187, but has come back down. It just feels like people are thinking like the parks might be shut down or not be full capacity, full profit driven, and they're worried about that when they really should be looking at Disney Plus and how it's growing and how it continues to grow and like really dominating fashion. Right here we can compare the different streaming services to each other. We have Disney, Disney's streaming service added 12.4 million subscribers since last quarter. Well, Netflix only added 1 million new customers, and then it has NBC Universal added 12 million for Peacock signups during the Olympics. The Olympics was a big thing for them, but Disney, even them getting 12 million, Disney outpaced them with 12.4. So Disney is growing, or Disney Plus is growing very quick, and it's really doing great numbers and stuff. So we're seeing this growth take off, and it's going to be a cash cow for Disney. It's making sure that the Disney ship doesn't sink, where like the parks don't start to cost more money, where they're like sitting empty, and then it costs more money just for upkeep and stuff without being able to run them. They're allowing that. They're allowing parks to run park capacity, doing all this stuff, run at losses, and Disney Plus allows all that until things start to ramp up and get better, and where the parks start to reopen, that money starts flowing back in. The streaming money starts flowing in. Their movies they can release on Disney Plus and get more subscribers to go there because people love the Disney movies. So there's just a lot of stuff that can go through Disney Plus that I don't think investors are really taking into account. And it's just crazy the growth that they're seeing. And even comparing Disney to Netflix, I mean, we see Netflix kind of trading the same way, just in a up and down fashion, very sideways. But if you were to take this chart here and look at Netflix's market cap, which you can't see here, I don't know why it doesn't pop up, but it's $229 billion. And then compare that to Disney's market cap, which is $329 billion. That's only $100 billion difference for something that Disney the Disney streaming service could very well compete with Netflix's streaming service. So to take a price of Netflix and kind of say Netflix is worth 230 billion. Let's say Disney gets to capture $100 billion worth of streaming service that goes on to the Disney brand. So that would put Disney from 329 billion to 429 billion. Let's say parks start to open up, these things start to bring in more money, people start to see that Disney parks are doing great, Disney movies doing great, and everything starts to ramp up again. Let's say Disney can reach that $500 billion mark, which wouldn't be insane. Adding $100 billion for the streaming service, just that alone, I think that might even be undervaluing it. And then 70 billion for investors getting excited about the parks reopening, movies starting to just being released directly to Disney Plus, upping their business model and being able to do things in-house and really optimize profits. Then I think Disney reaching a $500 billion market cap relatively soon, even within a year. Within a year or two, I think Disney could do that easily if the parks get to reopen and everything. But putting Disney at a $500 billion market, that would put each share at $272.25 a share. It'd be roughly a 50% increase. So that's what we would be looking at for even a short term for Disney. And I think that that is very doable. I think that's something that is definitely easily achievable for Disney Plus, the growth it's seeing, the parks reopening, Disney movies starting to be able to do everything in-house and directly send it to Disney Plus subscribers, and they can even charge for that. So they can have a movie released on Disney Plus and you pay them what, $10, $20 to see the movie, whatever it would be. And then that's all money that comes to Disney. Instead of doing it through a theater, split the money with a theater and do all of that stuff, it's all Disney profit. So this is a good sign for Disney. I think Disney is one of the stocks, especially a blue chip stock, where you don't have to be extremely worried about them going under or taking heavy risk. You see that they're just going to kind of do their thing, and they're not going to plummet in value unless something crazy happens again. And the only downside to Disney right now is the fact that their dividend is suspended and they're not paying it right now. So I would like to see that come back, and I think they're already said that it's going to be cut very drastically from what it used to be. I think it was over 1% or something, and it's just looking like the dividend might be less of a reason for the Disney stock, but that also gives them money to be able to grow the company and do something where it would make the stock, make the company grow more, turn into that growth company, and reach that $500 billion market cap that we've set out here a lot faster than if they were paying dividends and strapping themselves for cash. So guys, that's going to do it for this video. Disney stock, I do think, is one of the better stocks in the market, especially for blue chip growth stocks, where it's something where it's not insane risk, and it's a good company to hold long term regardless. So their subscriber count, subscriber growth is insane. Disney Plus is doing insane, and I do think that is severely not reflected in the stock price and in the company. I don't think investors are really taking into account what Disney Plus can grow into, especially when compared against Netflix. So, as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.